Hey, what's up guys? Sam here. And I'll be doing the premium video for 425.25. So, another week is in the books. Pretty strong week overall. Very decent looking weekly candle here. And one thing that really I've been looking at for a while and stood out at least so far to me today is that we are trying to close above this resistance zone. Basically, this very important high on SPY. And we did nominally close above it today. And so does that potentially set us up for something like this, where you have that resistance zone there, we close above it, underneath the market you have this kind of double tap, higher low, double bottom kind of situation. And does that give us enough ammunition to potentially retest the top of this range here, which kind of overlaps with this daily 200? And at least for now, based on how the market is trading currently, it certainly has that vibe to it. This is definitely a strong weekly close, because not only did you close above this high here, but then you closed back above the weekly 8. Now, one thing that I do have to point out here that is a little bit of a fly in the ointment is that the weekly cloud has gone red, and this is the first time the cloud has gone red since 2022. And the last time that it went red, it led to a little bit of a longer lasting pullback. So could we kind of go up here, test this cloud where it's red right around 566, 570-ish? I think that's possible. I think that there's enough juice here from the inside out. And certainly this week's action has been impressive. Even outside of the price action itself, outside of the charts, if you look at something like Tesla, reporting pretty bad earnings, and the stock going up a little bit after the report and then a lot more today. I think that that is kind of tipping the market's hand, that the market wants higher, at least at first. My longer term perspective on the market has not changed. We're still trading well below a daily 200. We still have a red weekly cloud that's in front of us, but at least in the short term, from a trading perspective, it has all the pieces to try to go higher before it runs into the next bit of potential resistance. Aside from that, that's really the most important things that I see here on this chart. The weekly chart is just neutral at this point. So it's just a neutral chart. You don't get a ton of information from that. The daily chart is neutral down, so you don't get a ton of information from that. Where I am seeing quite a bit of improvement is on the hourly charts and the internal charts on the lower time frames, especially in tech. So as long as those lower time frames can continue to build, I don't really see too much issue in the immediate term, outside of something surprising. But this market wouldn't surprise us, right? It wouldn't do that to us. So next is the NASDAQ here, the QQQ. And again, very strong close here on the NASDAQ, a little bit more pronounced above that same level. So a lot of these charts that we're going to be looking at, I'm going to be looking at the top of this candle here that came on the week where they delayed the tariffs. And you can see here that the NASDAQ now has a good close above that. Same thing where it's closing above its weekly 8 as well. And you do now have what would be normally considered a judo signal. A judo signal is when you have a down arrow immediately followed by an up arrow. That's a pretty strong signal. It's basically this signal here, down arrow, up arrow, that happened right before that. So pretty strong signal overall. You're getting a yellow bar on the squeeze histogram, so that also bodes pretty well. And I think here on the NASI, I don't see any particular reason, although it's going to be kind of messy. Certainly there's a lot of crap here to kind of have to chew through. I don't really see any reason that it couldn't come back and at least try to test that daily 200, and then we'll see what it's really made of. That is that's kind of the battle line that I see, right? Like, if they're going to have a real battle, then it occurs right there. And it would occur on the daily 200 on any of the indexes. Let's go to the IWM next. So IWM here, not as good, right? It doesn't have a whole lot of tech in it, so it doesn't really benefit as much. But at the same time, it has now 2 daily closes above this key level right here. So again, that high is the reference high, and you made a high above it yesterday, and then you made another high above it today. Slightly higher close as well. So while it's the worst chart that we've looked at by far, by a long shot, it is also doing its very best to try to improve. And that's really, it's going to be a bad chart until it's not a bad chart. So that's really all you can ask for from the red-headed stepchild that is the IWM. Same thing here with the Dow. The Dow so far actually has been the weakest of the bunch. From a relative strength perspective, because if we draw the same level in, again using that as the reference high, you can see that we are quite a ways below that. So while the NASDAQ has closed above it, the S&P has closed above it, the IWM has closed above it twice in a row, this one has not yet done the deed. So still a little bit of weakness here in the DIA, and I think that barring some massive changes, I think that we need to be focusing probably where we're seeing the strength and where we're seeing the strongest bit of buying is in the things that were beaten down the most. So that includes the Mag 7 and a lot of the high beta tech stocks, Palantir, MSTR, CrowdStrike, things like that. So that's the indexes. Again, really not a whole lot there in terms of like big picture developments. Like if we were to drill down and start looking at the internal structure of the market, it looks a lot better. But as it sits right now, most markets have this kind of dynamic where they're sideways on the weekly, they're sideways to down on the daily, and on the hourly they have uptrends, right? So you have sideways, sideways down, and then up. So room temperature water, cold water, hot water, all mixed in a jar. The way to navigate that usually is just going to be to navigate it with the smallest term time frames, and as long as those remain constructive, you look for more upside, you look for the larger time frames to start to improve. And if the smaller time frames like the hourly start to give any kind of signals to the downside, then we would have to adjust from there. Let's take a look at the dollar here. The dollar's pretty interesting. I don't have a particular read on it in terms of how it relates back to the stocks. Like normally, if the dollar was getting smacked, like it has been, this is normally good for stocks and normally good for risk. It's certainly better to see the dollar lower than higher for what we try to do with buying risk in the equity markets. For now, I don't really have too much of a read on it. There's no signal changes whatsoever. It gave a pretty good short signal here. You give a pretty good short signal up here, and then it's just been basically in a down cycle. So very bearish chart here. I'll just kind of default back to what I normally would say here on the dollar, and that is as long as it stays stable sideways to down, I think that generally over many markets introduces a good bit of tailwinds to the markets. I don't think you want to see it get destroyed, and I don't think you want to see it get super strong, but as long as it's just kind of stable, then I think that's good enough, especially at these levels, right around the 100 mark. We'll come back to the dollar periodically. We won't spend too much time on it because, again, I don't really know how it is currently really correlating to the market. I don't necessarily think that it is at the current moment, but I think that it's going to become pretty interesting here going forward, so we'll keep an eye on it. Let's take a look at the bonds here. So you got a little bit of a relief rally here in the 10-year rate. So this is bonds, so this is ZN. Up here is down on rates, and I don't really have anything here either, right? So this is just kind of a neutral situation, and when you have a neutral situation, you just it's kind of like an E-plot test. I think some folks will see it bearishly, some folks will see it bullishly. I would get a little bit more constructive if it was able to get above this 111.18 level. I think that's a pretty big level. But aside from that, let's maybe move over to HYG, which I think is a little bit more keyed in on what we're trying to do with the market, meaning that if you have a read that HYG is going higher, then usually that means the market will go higher with it. And here on HYG, we have basically the same situation, right? I can give you a very strong level that if it gets above, it's going to be very bullish, but at least for now, this is just a neutral chart. And the level here would be 79.05. If it can get above that kind of resistance band of the 200, then I think that that's going to be a pretty big deal for the market as a whole. But at least for now, this is just kind of neutral as well. So just to kind of recap what we're seeing so far, we are seeing 3 of the 4 indexes close above their tariff pause highs, which I think is pretty bullish. The only one that has not done that is the Dow. If you would have asked me which one would be the least likely to have done that, I would have guessed it would be the IWM. So I'm going to read that as a positive. Usually the Dow is kind of the more conservative index. So to see it lagging means that there's a little bit of animal spirits back into this market. And of course, if there's animal spirits back into this market, then that bodes extremely well for tech and high beta tech and Mag 7s and all that stuff that we normally like to trade. So that is that. Let's take a look at the VIX. I think it closed right around 25. So the VIX here is in a sell cycle. One of the best things that could happen for you if you're bullish is that the weekly goes into a sell cycle, and this is starting to look a lot more contained. This is starting to look a lot more like that, where it had an upside move. This was back when the yen did the spike thing. And now you've got a mid-level sell signal here on the VIX, which is going to be a pretty strong positive thing. You've also closed below the weekly 8. Obviously, you closed at the lows of the week. This is a very bearish candle, so that bodes pretty well for the market. Closing below the cloud, and you've been in a sell cycle on the VIX for a while now, basically since here. So this is all generally constructive for the bulls. So based on what I'm seeing here, again, there's a lot of things that are just like thin edges, meaning that, you know, we've gotten so used over the years to just trading like an up market. You buy every pullback to the daily 21, everything is just perfectly aligned, all that good stuff. We've kind of transitioned into this part of the market where it took a lot of damage, especially through the beginning part of April, the latter part of March, because of all the tariff talk. And so now the damage is attempting to be repaired. So let's go back to the SPY for a second. So since the damage is trying to be repaired, we really can't expect the daily chart, or the weekly chart for that matter, to look particularly good. This week has gone a long way in improving things, because basically of 2 signals here on the weekly chart. One is this yellow histogram bar. That's a very key thing to get this thing to hook back to the upside. You need that yellow bar. And then of course you have bull judo here, where you have the red down arrow followed immediately by an up arrow, and a close above that last week's high, above this major candle's high, above the weekly 8, and just a little bit below this this Fibonacci level, just 2 cents below. So in terms of doing what it can do, then that pretty much is as good as you could ask for it, right? You have that resistance level there from, that was support, that was support, that became resistance. So we use that line as kind of our over-under. And then underneath the line, we can see the double bottom with the higher low. So the thing is, if you, and I did this in the room earlier, I did it on SPX. I suppose I could do it on SPY real quick since we have a little bit of time together. So if we measure that low, which we know is a key low, it's the low for now. We measure it up to the tariff pause highs, which is obviously a very strong reference candle. You don't get very many 10% candles like that. And then we measure it down to the interim lows inside of that. You see how 100% of that leads you to basically right around the daily 200. So I think that's pretty cool, right? That this pattern here, and you could do this yourself. this pattern measures out basically targeting here. And that's, exactly where I told you I think the battle has to happen. So I think the battle for the next couple months will take place here, right? So next week, could we see a move into that level? Absolutely, we could. We have all the pieces for it. We also have really bad sentiment still under the market, so I think that bodes well, and probably some underpositioning by a lot of folks who, threw a lot of positions overboard here, and they'll see if they want to get back in. And then I would look for this zone here, right around 73 to about 80, to be the next battle line in the sand kind of situation. If we're able to get above this zone, and this really is a conversation for maybe next week's video, but if we're able to get above that zone, then that's a little bit of a game changer, right? That changes the overall structure of the market quite a bit, but we'll wait for that. So for now, be aware, 61.5, your yearly VWAP, know that level, and then above that, 73 to about 75 is where I think the market is trying to go, probably sooner rather than later. So we'll see how that plays out in the next week. All right, guys. Well, that is my time. Thanks as always. If you're watching this on the YouTube, leave us a like. It does help us out, and it's free. And for those of you in the room, I will see you guys again next Monday. Have a great weekend. Cheers.